In this video, we're going to take a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. So we'll be talking about gold, Nasdaq, EUR-USD, USD-JPY, and a little about the DXY, which is the dollar strength index. So as usual, we'll be starting with gold chart on a 4 hours time frame, as you can see on my screen here. So last week we talked about the possibility of gold heading higher, and we did get the move to the upside, but it was short-lived because we didn't have a retest. So this is a 4 hours time frame, and to reiterate, this is an ascending triangle. We had a massive bullish breakout, consolidation up here, good retest, and now a bounce to the upside. So I think this week is going to be a bullish week for gold based on the setup we have on charts, right? So going down to the 1 hour time frame, because that's exactly where we are going to try as much as possible to spot out our criteria to go long, right? So on this chart, it doesn't look like a chart where you want to go short because there's nothing giving any short indication right now. So very quickly, we had a good retest, which is our confirmation of a bullish bias, and we had a bullish move to the upside. So this bullish move to the upside took out this trend line and also took out this area of value, which is a support level that had a where we had this bearish breakout for our test, and we had a massive, good voluminous candle breaking out from this area of value and also taking out this trend line. So this means our bullish sentiment is confirmed. In my opinion, I don't see any other confirmation you need from this chart, and just taking a look at the chart, it already looks bullish. And my target for this will be 500 to 1000 pips, as the case may be. So you do you according to your risk management. So when the market opens, for those who are not in yet, because I got in on Friday, if you're not in yet, you should go in if the chart looks good to you based on your own personal strategy, right? Because I'm explaining this chart based on how I trade gold and how I watch out for confirmations before going long. I don't see any reason why I want to wait for this chart or for this trade before I go long. I know you say we are currently around the overbought level, but mind you, we're about to break out and price can stay overbought for a very long period of time before seeing pullbacks. So this looks prime to me, and I'm going to go in if I'm not in yet. When the market opens, stop loss is going to be around these lows because this is the next significant low before our possible before the movement to the upside, right? This is the immediate lows before these lows, right? So something else you could watch out for if you want more confirmation, you could wait for a pullback, which would be some sort of a retest of this area of value, validating the breakout from the trend line, and then they move to the upside. So then your entry would be around these price levels. Stop loss would be underneath the retest if it happens, and you can trade your position as you go higher. Remember, this price discovery, anything can happen on gold. You could get moved to the downside, move to the upside, thousands of pips, we have no idea. So all you have to do is trade your positions as we go higher. So if you are being more conservative and more patient, this is the best thing to watch out for to go long. But for me, I'm going to go aggressive. I'm already in, like I said, on Friday I got in. I have two entries, one around this bounce and another one around this breakout. So that's where I have my entries. My stop loss is around these lows, to give me an edge over the market, because just in case we get a week to the downside because of news and stuff, I know I'm safe around this low. So when price goes down, it means this whole setup has been validated. So that's why I'm already long, and my take profit is between 500 to 1000 pips higher, right? So that's it briefly for gold. Nothing much to see here. I don't see any reason why you want to go short right now, but anything is possible. If anything changes, I'm going to update those changes in our Discord. And if you're not part of our Discord yet, use the link in the description below. Join our Discord. It's totally free. So that's it for gold. Moving on, we're talking about Nasdaq. So Nasdaq, we have similar structure on Nasdaq as we do have on gold. So we had a bullish trend, multiple price bounce, 1 2 3 4, and we're going to be paying attention to what's happening over here, because this is where we want to watch out for our trade opportunity, right? So going down to the lower time frame, so I'm going to start with the 1 hour time frame. For example, I've kind of had two sentiments on this setup. So I'm going to show you my bearish case scenario and my bullish case scenario, right? So Nasdaq, after we bounced off of this trend line, we had a move to the upside. Is a very good area of value. Support, turned resistance, consolidation, good breakout, retest, and bounce. So there's a good chance we could see price continue to rise, right? So price could continue to rise, or alternatively price could break downwards. That's the setup I can see on the chart right now. So if you want to go long, I think now is a good time to go long actually, because we just bounced up of this area of value, right? And we seem to look bullish. Even when we had a week down, we still didn't break below, we wicked up back. So these price levels will be a good price level to go long. The reason why I think it's a good price level to go long is based on risk to reward ratio, right? Because if you go long right now, your stop loss would have to be below these lows where I have my alerts right now, that is dashed lines. So if you go long here, stop loss will have to be below these price levels, which will be approximately 250 pips. For, you know, an asset like Nasdaq, 250 pip stop loss is, you know, considerably a good stop loss, when you think about your potential take profit target. So potential take profit targets, let's take a measurement from here to these highs, will be around 10,000 pips, so 1,000 pips as case may be. So you're having a 1 to 4 ratio, right? So 250 pip stop loss with 1,000 pip take profit seems like a good and a fair deal to me. So if you're interested in going long based on your setup, based on what we have on chart after this retest, then by all means you could go long when market opens. Stop loss will be underneath these price levels, and take profit could be as high as these price levels, or you could trail your positions as we go higher. So for a bearish case scenario, I'm going to take out this trend line, for example. I'm going to take out these lows, and I'm going to watch for a possibility of price coming back down and taking out our trend line. So this would be one of the case scenarios where I go short. In fact, the only case scenario where I go short on Nasdaq. Other than this, I'm not going to be going short, and this chart looks extremely bullish in my opinion, right? Coupled with the fact that we just bounced off of this oversold level. So we're just coming from the oversold level, rising to the upside. We have some bullish momentum on charts with multiple price bounce of this area value. So I think there's a good chance we continue to rise. So if you have a good risk management, you could go long when market opens based off of what I just talked about, you know, having a retest 2 times and bouncing off that area of value. You could watch out for that, go long, set your stop loss 250 pips, and just hold the trade as we go higher. Or you could watch out for a bearish case scenario. You know, there's no easy way to do this, and wait for that breakout to go short. You go short, first take profit target will be around this price levels, second one will be around these lows, and so on and so forth. I'm going to show you briefly. So for a short position, your stop loss is going to be probably around these highs. That's if we do get a move to the downside, breaking this stuff, right? Breaking this trend line. So another confirmation to watch out for before going long could be waiting to see what price does. Maybe we get a consolidation, more consolidation on price levels, then a move to the upside. So this would give you a more, you know, reasonable confirmation to go long rather than just jumping into a long position right now. So for me, being a conservative trader, or for those traders who are conservative, this is the best approach to watch out for before going long. So then this will give you a symmetrical triangle structure with a bullish breakout. So then you have no excuse but to go long, right? Because just jumping in for a long position right now sounds a bit risky if you have a maybe small balance or you're not willing to take on so much risk. But for aggressive traders, you could go long and just wait for the price to do its thing, and eventually we go higher or we go lower. So that's my bullish and my bearish case scenario for Nasdaq and my price targets. If you have questions, leave your questions in the comment section down below. Moving on, we'll be talking about EUR-USD. So we talked about this last week. Massive move to the upside. I think we're up approximately 150 to 180 pips. So last week we took a long position here. I told you I was going to go long immediately the market opens, and this is around 200 pips approximately, or 180 pips. I got in, I got out of the trade because I don't really like to trade currency pairs, but we are still holding this trade. I think these highs here would be a good price target to exit those trades. And for my next trade entry, if I, you know, make up my mind to get into the trade, I'm going to wait for price to come into this area of resistance, consolidate a little, and then give us a nice bullish breakout to the upside. This is the only reason why I would be going long on EUR-USD if we take out these highs. Stop loss is going to be underneath the consolidation. Take profit target, first one obviously is going to be around these highs. Second one is going to be around these highs. and third one is going to be around this highs. So if you're willing to hold your trade for this long, then these are the price targets you should watch out for as the price moves higher. So I'm going to explain why I think price is going to move like this in the last section when we talk about DXY. So watch out for that. I think you're going to learn a thing or two there, right? So this is how this is what I'm going to watch out for to go long on EUR-USD. Approximately price target will be 900 pips. Mind you, this is a daily chart. Okay, that's why it looks massive like this, price movements. So this is a daily chart. It's a chart where I could fit in the entire candlestick on my screen here. So I'm going to go down to the lower time frame as well, but daily chart, pay attention to these price levels. And if you do this, your stop loss, as I said, is going to be beneath the consolidation, while your entry is going to be above the breakout from the consolidation. So this is the only reason why I would be going long. The reason is because consolidation gives us a sense of the bulls stepping into the market to push the price higher. So they are called continuation patterns, right? So it could be a bullish flag, a bullish triangle, it could be a symmetrical triangle. As far as we do get a bullish breakout at the end of that consolidation, then that should be okay to go long, right? So I won't be going short right now on EUR-USD because it doesn't make no sense to me. We just broke out from this macro structure. So this symmetrical triangle has been going on for more than a year now, since 18th of July, as you can see on my screen. So all the way from this price level to the current price levels. So it took us a year to consolidate within this price level, and now we just broke out and you want to go short. I won't be doing that. Okay, so going out to the lower time frame, so let's see 2 hours time frame, for example. Exactly the same thing I talked about on a 1 hour time frame, sorry, on the daily time frame. I'm going to wait. Let me go to the 4 hours chart because so I can fit in everything on my screen. Yeah, so 4 hours chart, like I said earlier, I'm going to wait for price to get into this area of value, touch this resistance level, consolidate a little, and then give us that bullish breakout. So however the consolidation is going to take place, I don't know. No one can tell you that, but watch out for the consolidation and watch out for bullish breakouts to go long, just in case we're going to continue this move to the upside. And mind you, something else to watch out for is a potential pullback. So this is a high over here, right? So we could tap into this area of resistance and pull back, retesting these highs, which could give us an opportunity to go long. So when that happens, I'm going to share my opinion, my thoughts in our Discord community. Moving on, we're going to be talking about USD-JPY. For every USD, I'm not going to be going shorts, only long position. So you could easily guess that since every USD is being bullish, USD-JPY should be bearish because you have USD on either side of the currency pair. So for USD-JPY, we talked about this last week with the possibility of a sell trade opportunity. So this is the 6 hours chart. You can see we had this trend line, good breakout, retest, and now we seem to be heading lower. So I do think the ultimate price target is around these lows, and it's going to happen very, very fast, faster than you may think. And this is going to be approximately, let's see, approximately 1,600 pips. Massive profits for those who are going to be trading this. So going down to the 2 hours chart, for example, this one, it's difficult to get a good trade entry, except you don't mind having a very wide stop loss, right? So I could say go long right now, but there's a good chance we get a pullback to the upside and all the way down. So just like this, till we eventually crash lower, right? So if you're going to be going long when the market opens, your stop loss wants to be above these highs, right? So if your stop loss is above these highs, then I think you are probably safe. But this is Forex trading, anything can happen in the market. But the safe price levels to put your stop losses around these highs, but there's a very good chance we go above and dump. That's just the issue I have with currency pairs. But this looks like a very good opportunity to go short because of the potential price target. But you have no idea how to measure the swings in between before we go short. So let me just take these highs. So let's say, for example, we take these highs like this. So I'm just showing you how to carry out a simple analysis to get the best possible entry you could see, right? So if you take out this trend line, so you could wait for price to maybe reverse to the upside, right? Then consolidate a little and then look for your sell trade opportunity around these price levels. So if this happens, then this should be a very good opportunity to go short. So this seems like a descending channel. There's no guarantee that this will happen, but it's going to give you a better chance for a tighter stop loss, because when you go in here, your stop loss wants to be above the high after we touch the the resistance level of the channel, right? So this will be another way to get in with a very minimum risk, because if you go short over here, for example, and your stop loss is around here, that's already 250 pips stop loss. So if your risk management is good enough to hold that kind of risk, then by all means you could jump into the trade and adjust your risk management as it suits your trading style, right? So that's it briefly for USD-JPY. I don't see any reason why you want to go long on this chart because it looks bearish, right? So last week I jumped into a trade around these price levels after the retest, and I think I grabbed 200 pips or so, or 300 pips. So yeah, approximately 300 pips, because I got in around these lows before we moved up and came back down. So I'm watching this closely. I don't think I'll be going into this trade because my hands are already with Nasdaq and gold. So Nasdaq and gold is where I have my focus this week. That's what I'll be trading. I won't be trading any currency pairs, but for those trading, these are stuff to watch out for when trading EUR-USD or USD-JPY. So lastly, we'll be talking about the DXY, dollar strength index. So you don't trade this, but this gives you a good sense of an indication of how strong the dollar is and how to trade in major currency pairs, which is EUR-USD, GB-USD, AUD-USD, USD-JPY, and so on and so forth, right? So DXY trading at a significant area of support, significant area of value. If this doesn't hold, mind you, this is a daily chart. If this doesn't hold and we get a break to the downside, then expect significant weakness from the dollar. So a significant weakness from the dollar means EUR-USD is going to go up, GBP-USD is going to go up, AUD-USD is going to go up, right? AUD-USD is going to go up. So these currency pairs are going to go up. Why? USD-JPY is going to go down, USD-CAD is going to go down, USD-CHF is going to go down, right? So understanding the base currency pairs, the base currency and the quote currency in the currency pair matters a lot. So if the DXY breaks the support level and goes lower, then expect those significant price movements across those currency pairs I just mentioned. EUR-USD, GB-USD, AUD-USD are primed to go higher if this breaks down. USD-JPY, USD-CAD, USD-CHF are bound to go lower if this breaks downwards. So that's how to trade major currency pairs. You follow the DXY swiftly and carefully to watch out for strengths and weaknesses for you to be able to spot out your good trade opportunities. So I'm going to give you a brief example right now. So you can see this price movements on DXY all the way from these highs, down to these lows, right? You can see the movement to the downside. Going to the EUR-USD, you can see it translates to the movement to the upside, what we have over here. On USD-JPY, it translates, excuse me, I'm going to go down to the 6 hours chart so I can show you clearly. So USD-JPY, it translates to the movement we have to the downside over here. So if you check other currency pairs like this, you would notice when the DXY is weak, USD-JPY is weak, USD-CAD is weak. So let's check USD-CAD real quick. USD-CAD. So USD-CAD, yes, 6 hours chart, you can see weak, right? Let's check USD-CHF real quick. USD-CHF, you can see weak. That's because the DXY is weak. So if you pay attention to EUR-USD, you can see EUR-USD is bullish, strong. GBP-USD, for example, GBP-USD, sorry, USD, bullish, massive bullish move. I didn't pay attention to this during the week because I was focused on trading EUR-USD and Nasdaq. You can see, so this is simply because the DXY is bullish. So EUR-USD, let's check AUD-USD as well. AUD-USD. So AUD-USD, you can see bullish. This is because the DXY is bullish. It's bearish, sorry. So the DXY is bearish, EUR-USD, GBUSD, AUD-USD tends to be bullish, and USD-JPY, USD-CHF, USD-CAD tends to be bearish. So they go hand in hand. So understanding the DXY and how it moves will give you an edge over trading major currency pairs. So that's it briefly for this week's analysis. I hope this was helpful. The tip on DXY, I hope you find it helpful. If you do, or if you don't agree with me, leave your comments leave your thoughts in the comment section down below, and I will try to respond as fast as I can. So that's it for this week's analysis. See you next week.